Silver just exploded 22% from its $65 low, and right now, traders are asking the million-dollar question. Is this the real reversal we've been waiting for, or are we walking straight into another brutal fakeout? If you're holding silver thinking about buying, or you just lost money in this volatility, you need to hear what's coming next, because the signals we're seeing right now could either make you serious profits or leave you holding the bag. Stay with me, because by the end of this video, you'll know exactly what the smart money is doing and whether this rally has real legs or if it's about to collapse. Before we dive deep into the charts and data, do me a quick favor. Smash that like button right now and subscribe to Money Mindset Media, because we are bringing you no-nonsense market analysis that actually helps you make better trading decisions. Hit that notification bell too, so you don't miss our next breakdown when silver makes its next major move. All right, let's talk about what just happened. Silver bottomed out near $65, and since then, we've seen a powerful 22% surge. That's massive movement in a short period, and it's got everyone's attention. But here's the thing, we've seen this movie before. Silver is famous for these violent head fakes that trap retail traders right before reversing hard. So we need to look at the actual evidence, not just the price action, to figure out if this is legitimate accumulation or just another bull trap designed to shake out weak hands. First, let's understand why silver dropped to 65 in the first place. The entire precious metal sector got hammered when the dollar strengthened and real yields started climbing. Risk appetite shifted away from safe haven assets, and leveraged traders got liquidated hard. That selling pressure created a capitulation event where even strong hands started questioning their positions. But here's what's interesting. That kind of panic selling often marks important bottoms because it flushes out all the weak holders and creates a clean base for the next move higher. Now, the 22% rally off that low is significant, but we can't just look at the percentage gain in isolation. We need context. Is this rally happening on strong volume? Are we seeing institutional accumulation or just retail FOMO? What's happening with the dollar, bond yields, and the broader macroeconomic picture? These are the questions that separate real reversals from temporary bounces that fail. Let's start with volume. When silver started bouncing from 65, the initial move had decent volume, which is what you want to see at a potential bottom. Heavy volume on the reversal suggests real buying interest, not just short covering. But as the rally extended, something interesting happened. Volume started to taper off as price moved higher. That's actually a concerning sign because strong, sustainable rallies need increasing participation. When volume dries up as price rises, it often means the rally is running out of fuel and could stall or reverse. Technical indicators are giving us mixed signals too. The RSI bounced from oversold territory, which is normal after a sharp drop, but now it's approaching overbought levels without any meaningful pullback. That suggests the rally might be getting ahead of itself. The MACD showed a bullish crossover, which is positive, but the histogram isn't expanding aggressively, which tells us momentum isn't as strong as the price action might suggest. These are subtle clues that experienced traders watch because they often predict what happens next. Here's where it gets really interesting. The broader macro environment is critical for silver because it's both an industrial metal and a monetary asset. Right now, we're seeing conflicting forces. On one hand, industrial demand remains relatively strong as manufacturing slowly recovers, and green energy projects continue to require massive amounts of silver. Solar panels alone consume enormous quantities, and that structural demand isn't going away. On the other hand, if central banks keep interest rates elevated or the dollar continues strengthening, that creates headwinds for precious metals regardless of industrial demand. Let me break down what the smart money is actually doing, because this matters more than any single indicator. Large speculators and commercial traders leave footprints in the commitment of traders' reports, and those footprints tell a story. Recently, we've seen commercial traders, who are typically the smart money in precious metals, reducing their short positions. That's significant because commercials are usually net short silver, and when they cover shorts, it often precedes higher prices. However, they haven't flipped to net long yet, which suggests they see a bounce, but maybe not a major bull run just yet. Retail sentiment is another piece of the puzzle, and honestly, it's concerning. Social media is lighting up with people calling for silver to hit $100 or even higher in the near term. YouTube videos with rocket emojis are everywhere. When retail gets this excited this quickly, it's often a contrarian indicator because retail tends to pile in at tops, not bottoms. I'm not saying retail is always wrong, but when everyone is bullish and loud about it, you need to be cautious because that's when smart money often takes the other side of the trade. Now let's talk about the elephant in the room. The $65 level that silver bounced from. Is that actually a significant support level, or was it just a random price point where buyers happened to step in? Looking at historical price action, 65 doesn't have a massive history as support or resistance. It's not like silver spent months consolidating there before or bounced from it multiple times in the past. That makes me question whether this is a structural bottom or just a short-term oversold bounce. Real bottoms usually form at levels where price has significant history, where there's been previous accumulation or distribution. Here's something most people aren't talking about: the correlation between silver and other risk assets right now. Traditionally, silver moves with gold, but it also has a strong correlation with industrial commodities and risk assets when the economy is expanding. Right now, we're seeing silver rally while some other risk assets are struggling, which creates a divergence. Divergences like this don't last forever. Either silver has to pull back to realign with the broader risk environment, or other assets need to catch up. Watching how this divergence resolves will give us major clues about whether this silver rally is sustainable. Let's also consider the geopolitical backdrop, because it absolutely matters for precious metals. Tensions in various parts of the world create safe haven demand, but they also create uncertainty that can freeze up markets. Right now, we're in a relatively calm period geopolitically compared to recent years, which means that safe haven bid for silver isn't as strong as it could be. If we see a major geopolitical flare-up, silver could rocket higher regardless of technical levels. But trading on geopolitical predictions is dangerous because those events are impossible to time accurately. The inflation narrative is crucial too. Silver rallied hard during the inflation spike because it's seen as an inflation hedge. But inflation has been cooling, at least according to official numbers. If inflation stays under control and the Fed doesn't need to cut rates aggressively, that removes one of the major bullish arguments for silver. However, if inflation reignites or if we see currency debasement concerns rise, silver becomes attractive again very quickly. This is why macro matters so much for commodity traders. You can't just trade the chart. You need to understand the fundamental drivers. Here's a scenario that could play out. Silver could continue higher in the short term, maybe testing the $75 to $80 range, driven by short covering and retail FOMO. But without a fundamental catalyst like a major geopolitical event, currency crisis, or a dramatic shift in monetary policy, that rally could stall and reverse hard. The traders who bought at 65 and took profits at 75 would do great. The ones who FOMO in at 78, thinking it is going to 100, could get destroyed when it drops back to 68. This is why having a plan and sticking to it matters more than trying to catch every tick. Risk management is something we need to talk about because it's the difference between surviving as a trader and blowing up your account. If you're in silver right now with profits, where's your stop loss? Have you taken partial profits? Are you letting it ride with no plan? These questions matter because silver is volatile. It can give you a 20% gain and take it back in days. Professional traders scale out of positions as they become profitable. They move stops to break even or into profit. They don't just hope the rally continues forever. Hope is not a strategy. For those, let's talk about what would confirm this is a real bottom and not a fake out. First, we'd need to see silver break above its previous high with strong volume. That would show the rally has enough momentum to take out resistance. Second, we'd need a healthy consolidation or pullback that holds above the 65 low. Bottoms aren't usually V-shaped. They take time to build a base. Third, we'd want to see improving fundamentals like weakening dollar, falling real yields, or increasing industrial demand. Without those, any rally is just technical and can reverse quickly. On the flip side, here's what would confirm this is just a fake out. If silver fails to break through key resistance and starts making lower highs, that's a massive red flag. If volume continues to decline as price tries to move higher, that shows the rally is losing steam. If we see commercial traders start aggressively adding to short positions again, that would suggest the smart money thinks prices are getting too high. And if the dollar starts another leg higher or yields spike, silver would likely get crushed regardless of its technical setup. Something I want you to understand is that markets don't move in straight lines, and neither silver bulls nor bears will be right all the time. The goal isn't to predict every move perfectly. The goal is to have a framework for decision making that keeps you on the right side of the bigger trends and protects your capital when you're wrong. Ego destroys traders. The ability to admit you're wrong and cut a losing trade is what separates pros from amateurs. Let's dig into some historical comparisons, because silver has done this before. Back in 2011, silver went on an absolute tear, hitting nearly $50 before collapsing back under 30. The rally felt unstoppable at the top. Everyone was bullish. Retail was pouring in. And then it reversed violently. More recently, in 2020, silver rallied hard off the COVID bottom, and many people thought it was going to break out to new all-time highs. It didn't. It stalled and consolidated for months. The lesson is that silver is prone to explosive moves that attract attention and then disappoint the crowd. Knowing this history should make you cautious about assuming any rally will continue just because it's strong. Another factor worth considering is the mining stocks. Silver miners often lead the metal itself. If miners are breaking out to new highs while silver is still rallying, that's a confirming signal. But if miners are lagging or showing weakness while silver pushes higher, that divergence is a warning sign. Right now, the mining stocks are showing mixed action. Some are performing well, others are struggling. That lack of uniform strength suggests the sector is not fully convinced this rally is the real deal yet. Here's the bottom line on whether this is the bottom or a fake out. The evidence is mixed. We have a strong bounce off an oversold low, which is positive. We have some encouraging signs from commercial positioning, but we also have declining volume as the rally extends, overbought technical indicators, very bullish retail sentiment, and a macro environment that's not clearly supportive. That combination suggests this could easily be a bear market rally rather than the start of a new bull run. If I had to put probabilities on it, I'd say there's maybe a 40% chance this is a legitimate bottom that leads to a sustained move higher, and a 60% chance this is a short-term bounce that eventually fails and retests the lows or goes lower. Those aren't scientific odds, they're just my read based on the weight of the evidence. And here's the key. Even if I'm wrong, and this turns into a massive bull run, I can adjust my position as new evidence comes in. Trading is about updating your views as conditions change, not stubbornly sticking to a prediction. For active traders, the strategy right now should be to look for high probability setups rather than just buying because price is going up. Wait for pullbacks to support levels. Use tight stops. Take profits as the trade works. Don't over-leverage. Silver's volatility can amplify gains, but it can also amplify losses if you're on the wrong side with too much size. The traders who survive long-term are the ones who respect risk and live to trade another day. For longer-term investors, if you believe in the structural bull case for silver based on industrial demand, currency debasement, or geopolitical risk, then short-term volatility shouldn't shake you out. But even long-term investors should have a plan. Know at what price you'd add more. Know at what price you'd reduce. Don't just hold blindly and hope. Hope without a plan is how people lose money in markets. Before we wrap this up, I want to hear from you. Drop a comment below and let me know. Are you bullish on silver right now, or do you think this rally is a trap? What price target are you watching? Are you already in a position or waiting on the sidelines? Your insights and perspectives add massive value to this community, and I read every comment. Also, if you found this analysis helpful, share this video with other traders who need to see it. The more we share real information and cut through the hype, the better we all become as traders and investors. Here's what I'll be watching closely in the coming days and weeks. First, how silver reacts at key resistance levels. Does it power through or stall in reverse? Second, what happens with the dollar and bond yields because those drive precious metals more than anything? Third, the next commitment of traders report to see if commercials are adding shorts or if they're staying neutral. And fourth, the overall risk sentiment in markets. If we see a risk-off move, silver could benefit as a safe haven. If risk appetite stays strong, industrial demand could support prices. One more thing I want to emphasize. Don't let FOMO drive your decisions. The fear of missing out has destroyed more trading accounts than probably any other emotion. If you miss this move in silver, there will be another opportunity. There always is. Markets create opportunities constantly. What you can't afford to do is chase a move emotionally, get in at the top, and then panic sell at the bottom. That cycle is how retail loses money consistently. Be patient. Wait for your setup. Execute your plan. Manage your risk. That's how you build wealth over time in markets. Silver is at a critical juncture right now. The 22% bounce from 65 has everyone paying attention. But whether this is the bottom or just a fake out will be determined by what happens next. The price action over the coming weeks, the macro developments, the positioning of smart money, and how silver responds to resistance will all give us clues. Stay alert, stay flexible, and most importantly, stick to your trading plan. Thanks so much for watching this breakdown on Money Mindset Media. If you haven't subscribed yet, what are you waiting for? Hit that subscribe button and turn on notifications so you're always updated when we drop new market analysis. Give this video a thumbs up if it helped you understand what's really happening with silver. And remember, successful trading isn't about being right every time. It's about managing risk, staying disciplined, and making informed decisions based on evidence, not emotion. I'll see you in the next video where we'll continue breaking down the markets and helping you build that money mindset.